Hello everyone! Today, we're diving into an exciting topic: dividend stocks that can pay you $1,000 per month in 2024. Imagine having a steady stream of income just from holding certain stocks in your portfolio. It's like getting paid to do nothing, and who wouldn't want that? Let's get started and explore how you can achieve this financial goal. First, let's talk about what dividend stocks are. For those who might be new to this, dividends are payments made by a corporation to its shareholders. Essentially, it's a way for companies to share their profits with investors. The amount you receive depends on how many shares you own and the dividend rate set by the company. Now, if you want to generate $1,000 per month, you need to carefully select stocks with reliable and high dividend yields. One of the best strategies is to focus on companies with a strong history of paying dividends. These are often large, well-established firms with stable cash flows. Think about sectors like utilities, consumer staples, and real estate investment trusts, REITs. These sectors tend to be less volatile and more consistent in their payouts. For example, utility companies are often a safe bet. They provide essential services like electricity and water, which people need regardless of economic conditions. Because of their stable revenue streams, they can afford to pay regular dividends. Companies like Duke Energy and NextEra Energy are great examples in this sector. Consumer staples is another sector worth considering. These are companies that produce goods people use every day, such as food, beverages, and household products. Think of brands like Procter & Gamble or Coca-Cola. These companies have been around for decades and have a strong track record of rewarding their shareholders with dividends. Real estate investment trusts, or REITs, are also a fantastic option. REITs own and often operate income-producing real estate. The beauty of REITs is that they are required by law to distribute at least 90% of their taxable income to shareholders as dividends. This makes them a reliable source of income. Look into companies like Realty Income Corporation or Simon Property Group. Let's not forget about the financial sector. Banks and financial institutions often pay attractive dividends. Companies like J.P. Chase and Bank of America are giants in this space and have been known to provide their shareholders with consistent dividends. Tech giants are also stepping up their dividend game. Companies like Apple and Microsoft have started to pay dividends as they generate enormous amounts of cash flow. While tech was traditionally known for growth rather than income, these behemoths are proving they can do both. It's important to diversify your investments across these sectors to minimize risk. By holding a variety of dividend-paying stocks, you're not overly reliant on the performance of a single sector. This strategy helps ensure that you maintain a steady stream of income even if one sector experiences a downturn. Now, let's talk about how to actually achieve that $1,000 per month in dividends. It's essential to calculate how much you need to invest in each stock to reach your goal. The general formula to determine the required investment is required investment, monthly income x 12, dividend yield. Let's break this down with a hypothetical example. Suppose you're looking at a stock with a 4% annual dividend yield. To generate $1,000 per month, which is $12,000 per year, you'd need to invest $12,000 divided by 0.04 equals $300,000. This means you'd need to invest $300,000 in a stock yielding 4% annually to earn $1,000 per month. Of course, this is a simplified calculation, and in reality, you'd spread this amount across multiple stocks to diversify and mitigate risk. Let's highlight some stocks from various sectors to illustrate this approach. Starting with the utility sector, Duke Energy, with its consistent dividend payments, offers a yield of around 4%. Investing here can provide a stable foundation for your dividend income strategy. In the consumer staples sector, Procter & Gamble is a reliable choice, with a yield of approximately 2.5%. Though slightly lower, combining it with higher-yielding stocks can balance your portfolio. Moving on to REITs, Realty Income Corporation is known for its monthly dividend payments and has a yield close to 4.5%. This makes it an excellent candidate for generating regular income. The financial sector, with J.P. Chase, offers a yield of around 3%. Banks like J.P. Morgan are not only stable but also have the potential for capital appreciation, adding another layer of benefit to your investment. In the tech sector, Microsoft provides a yield of around 1%. While not the highest, the growth potential and stability of such a giant make it a valuable addition to your portfolio. A Roth IRA is a special retirement account where you contribute after-tax dollars, and your investments grow tax-free. The best part? Qualified withdrawals in retirement are also tax-free. This makes it an excellent vehicle for building a substantial dividend income stream. Now, the goal is to use the investments within your Roth IRA to generate $1,000 per month in dividends. This requires a strategic approach, focusing on high-quality, dividend-paying stocks. Let's explore how to do this. Starting with the basics, you'll want to look at dividend stocks from different sectors to diversify your portfolio. This helps reduce risk and ensures a steady income stream even if one sector underperforms. One of the best sectors to start with is utilities. Utility companies like Duke Energy provide essential services that people need regardless of economic conditions. They typically offer stable and reliable dividends. Duke Energy, for example, has a dividend yield of around 4%. Next, consider consumer staples. Companies like Procter & Gamble produce everyday products that people buy regardless of the economy. With a dividend yield of approximately 2.5%, Procter & Gamble is a solid choice for your portfolio. Real estate investment trusts, or REITs, are another excellent option. These companies own and operate income-producing real estate and are required to pay out most of their earnings as dividends. Realty Income Corporation is a popular REIT with a yield close to 4.5%. The regular monthly dividends make it a favorite among income investors. In the financial sector, JP Chase is a strong candidate. Banks and financial institutions often pay attractive dividends. With a yield of about 3%, JP Chase provides both income and potential for growth. Don't forget about tech giants like Microsoft. While their dividend yields might be lower, around 1%, their strong growth potential and financial stability make them valuable additions to your Roth IRA. Combining these stocks, you could create a diversified portfolio. For instance, allocating $60,000 to Duke Energy, $40,000 to Procter & Gamble, $80,000 to Realty Income Corporation, $70,000 to JP Chase, and $50,000 to Microsoft could give you a balanced mix. Each of these stocks contributes to your overall dividend income, helping you reach that $1,000 per month target. Remember, these investments should align with your risk tolerance and financial goals. It's wise to regularly review your portfolio and adjust your holdings based on company performance and market conditions. Additionally, reinvesting dividends through a dividend reinvestment plan, DRIP, can help grow your income stream over time. Another important tip is to stay informed about changes in dividend policies. Companies can increase, decrease, or even suspend their dividends based on their financial health and market conditions. Keeping an eye on earnings reports and company announcements can help you make timely decisions. Now, let's address the importance of having a safety net. It's advisable to keep some funds in cash or low-risk bonds to cover any shortfall if your dividend income fluctuates. This ensures you maintain financial stability without having to sell your stocks during a market downturn. To sum up, generating $1,000 per month in dividend income is achievable with careful planning, diversification, and regular portfolio reviews. Focus on high-quality stocks with a solid track record, diversify across sectors, and stay informed about market conditions. With patience and disciplined investing, you can build a reliable income stream to support your financial goals. That's all for today. If you found this information helpful, make sure to like and subscribe for more insights on building your wealth through smart investments. Thanks for watching, and see you next time.